Okay, so let's say we were lucky enough and someone over there in Canberra is listening to this and we start seeing some good foundations laid down so business can actually get on with it. Now, in terms of business, what's going to happen? Is there going to be more capital coming in through private equity investment funds? Because the ASX isn't growing as much as it once was. IPOs have gone almost, not backwards, but gee whiz, they're a long way short of what they used to be a decade ago.
That's
so what's happening?
Well, capital's freely available and it's just pooling in different areas and it's going, through different channels. Still available. So there's no lack of capital. So that's the first thing, either in Australia, in the United States, globally. Capital's everywhere.
Well, I can get it?
You can get it. Anyone can get it.
Costs?
Well, you may not want to go and list on the ASX, because there's a set of, rules and prescriptive behaviours there. But private capital is growing and available and it focuses on very specific risks. Back to risk. Okay. Private capital is very good at looking at the specific risks of the businesses it invests in because it's often paid a high price to get into that asset and it has to leverage up in order to get its returns and it has to be extremely disciplined. So its governance is quite prescribed, and I'm talking about REM structures, for example. Yeah. And REM structures are far more flexible in the private world. And so you can then attract the right kind of people. You can share the upsides. And
you don't perform, you share the downsides.
Share the downsides, exactly.
Yep.
And yet, when you look at some of the prescriptive ways in which capital is told to act when it, is a public company, and the political pressure that comes on, it's your front page and you're going to get, but if it's private capital, you've got a lot more flexibility not to do the wrong thing. You've got to come back to what's your social value add, for example, measure it, contribute to society, do all the right things, but you can get on with life. So these changes are not, by the way, private capital as a percentage of the total of, world equity markets is the number of companies that are private over 100 million. In the US is roughly 80, a bit higher. In Europe, it's roughly 96%. In Australia, it's above 75%, depending on whose numbers you use. Yeah. Private is the game and it will continue to grow and capital will continue to flow to it. So it isn't an either or. It's only an either or if you're a broker and you're worried about, I haven't got enough stock. But if you're actually a business person, you go, how good is this? Freedom of capital from all these capital sources. I can get it from the public markets. I can get it from, the equity markets or the debt markets. I can get it from firms that want to invest with me long term. And actually what it is about is the discipline of match funding your assets and your liabilities. And that's where we've got to, again, come back to risk. If you match fund your assets and your liabilities, you've got a lot lower risk than if you've got a short-term funding and a long-term lending. That's dangerous.